Real estate investment trusts, or REITs, are usually considered income investments, so many investors panic and sell them when interest rates begin to rise. However, with the Federal Reserve's apparent recent change in policy, maybe you should rethink selling your REITs. Let's take a look. This list here from Market Watch shows the REITs in the S&P 500 sorted by yield. As you can see, these REITs generally have a good performance. Contrary to popular belief, a rising rate environment is typically one that also features good economic growth. It also means that a REIT's rental income and earnings will also likely rise, which tends to offset the negative price action with rising interest rates. And from this list here, you can see that the top 10 REITs have yields near or above 4%. And let me move down this list here, and you can see that the top one, Iron Mountain, has a dividend yield current at 6.96%. Moving on down here very slowly, we can see that Simon Property Group there is at 4.36%. Moving on down, Public Storage, one of my favorite, 3.85%. Further down, we can go to Digital Realty Trust Inc. that has data centers, as well as extra storage space with their self-storage facilities. Moving down, a couple of apartment communities, retail, another multifamily, industrial, Alexandria Real Estate Equities, which is life sciences and technology. Moving down to Prologis, which is logistics and distribution. Moving on through here to American Tower Corp, AMT, which is another good one, has been, 1.89%. And then rounding out there with CBRE and SBA Communications, and those show 0%. So let's go to the next chart. And as shown is this total return chart, REITs as a group have measured up well against the broader stock market over the short and the long periods. And this chart shows how the S&P 500 REIT industry group's total returns, which includes reinvested dividends, has compared to the entire S&P 500 over various time periods. You can see that the REITs have outperformed the market in 2018 and thus far in 2019. Now, the overall market prevailed in the 2 to 5 year time periods, but then again, the REITs outperformed in the longer term, the 10-year and the 15-year time periods. And this chart here, which shows the same information with the exception of 2018, 2019, but it uses the average annual total return. And you can see that's the same setup, that in the short term, the REITs outperformed. You can't see 2018 and 2019. The overall market outperformed in years 2, 3 through 5. And then the REITs, again, outperformed in the 10-year and the 15-year time frames. So now let's go take a look at the stock at the top of the list, Iron Mountain. And we're looking at the 20-year monthly chart on Iron Mountain Inc., and the symbol is IRM. For disclosure purposes, I do not hold any shares of IRM at this time. The bottom, back here in 2009. Since then, we've had a pretty good uptrend with higher lows in that sort of direction there. At the same time, we've got higher highs forming the top of the channel. So right now we're heading to the middle of the channel, but looking here at the MACD, you can see that we had a good basing pattern here, but the recent move from late 2018 is pretty sharp, so I'd watch that. It doesn't look like this or like this. It actually looks more like the 2009 to 2011 time frame with a little bit of hesitation in there. So I'd watch that hesitation just to see. As usual, check those fundamentals. But the histogram looks good, looks decent. Relative strength is near the midline. I'd like to see that strengthen here in the future. but the stochastics look good with a basing here, and the fast line on the stochastic has moved through the slow line, so looks like things are improving as they have done here in the past few times as well. So my expectation is that things will continue to move on up, maybe not all that quickly. But volume looks good. It has remained at a relatively decent level throughout the last several years. And then the Williams, a good basing here with a run toward the overbought territory here, -20 to the 0, this area here. But it can stay up there for a period of time as it has in these areas here. But it has a little bit of a retrenchment, so just watch that. But for the most part, I think looking at this chart, what I like about it is the trend line or the channel since 2009. It's fairly predictable and looks like things are continuing in a good manner. But as usual, check your fundamentals. For today, that's ChewDog Charts. Thank you.